All right, future CPAs, listen up. If you're tired of just memorizing contract law for a quiz only to forget it a week later, this is for you. We're not doing a dry lecture. Nope. This is a brain hack, specifically designed to lock these core concepts into your long-term memory, so they're still fresh when you sit for the LACPA in a few years. Let's get into it.
Okay, let me ask you something. Ever clicked place order on an online shopping app? Or tapped confirm for a food delivery? Of course you have. You made a deal, you agreed to pay, and they agreed to deliver. You probably didn't even give it a second thought.
Well, believe it or not, in that split second, you created a contract. That simple click, that deal agreement, that meeting of minds, that's the absolute heart of a legally binding contract. It's the foundation for literally every business deal you'll ever look at in your career.
So let's get official for a second. What is a contract really? We're going to break down the one legal definition you absolutely have to burn into your brain. Here it is, straight from Article 1305 of the Civil Code. A contract is a meeting of minds where one person binds himself to another to give something or render some service. Let's translate that from legalese. It just means two people agree, and one person makes a legally enforceable promise to do something for the other. That's the formula. Agreement plus an obligation. That's it.
Just memorizing that definition isn't going to cut it 3 years from now. So here's the hack. Think of every contract like it has a story. A simple story with a beginning, a middle, and an end. Let's look at its 3 life stages. And here they are: negotiation, perfection, and consummation. Think of it like this: the idea, the handshake, and the follow-through. The beginning, the middle, and the end of the story. Let's walk through each one.
First up, stage 1, negotiation. You can think of this as the talking stage. You're checking prices, you're haggling, you're sending offers and counteroffers back and forth. It's the whole what-if phase. Now, what's super important to remember is that at this point, there is no contract yet. It's all just talk.
Then comes stage 2, perfection. This is the magic moment. This is the exact instant where both parties finally say yes to the same thing for the same reason. The minds meet. This is the virtual handshake, and bam! The contract is officially born. It's legally binding from this point forward.
And finally, we hit stage 3, consummation. This is all about the follow-through. It's when everyone does what they promised to do. The product gets delivered, the payment is made, the service gets done. Once all the promises are kept, the story is over. The contract is fulfilled and terminated.
Okay, so we've got the story down pat. Now let's talk about the physics of a contract. These are the unbreakable, fundamental rules, like the laws of gravity, that govern every single contract, no exceptions. Master these, and you're golden.
Rule number 1 is the principle of autonomy. The easiest way to think of this is just freedom. You and the other party are basically free to agree on whatever you want. You get to be the lawmakers for your own agreement. But, and this is a big but, that freedom isn't unlimited. And here's why. Article 1306 sets up the guardrails. It says your agreement can't go against the basic rules of society. So nothing contrary to law, morals, public order, or public policy. For you as a future accountant, this means a contract to, say, cook the books for a client? No way. It doesn't matter how much you both agree. That contract is void from the start.
Next up, principle number 2, obligatory force. This one's a game changer. A valid contract isn't just a suggestion. It's not a pinky promise. It literally has the force of law between the two of you. It's your own private law, and you are obligated to follow it in good faith. And the law backs us up right here in Article 1159. The key phrase to lock into your brain is force of law. It means if things go south, the courts can step in and enforce the deal. And that little phrase at the end, in good faith, that's crucial. It just means you have to be honest and fair about holding up your end of the bargain. No sneaky business.
All right, on to our third rule, the principle of mutuality. The simplest way to remember this is that a contract has to be a two-way street. The deal must bind both parties. You can't have a situation where one person is totally locked in while the other can just decide, I don't feel like it today, and walk away.
Article 1308 spells this out perfectly. It says the validity or compliance cannot be left to the will of one of them. A contract is a partnership, not a dictatorship. It's got to be balanced. Both sides have to be on the hook for it to be a real, valid contract.
And our fourth and final principle is relativity. Think of a contract like a private group chat. What happens in the chat?
generally stays in the chat. It only affects the people who are in it. In legal terms, that's the parties, their assigns, people they transfer their rights to, and their heirs. Everybody else? They're outsiders.
So Article 1311 lays down this general rule. But, and listen closely because this is where exam questions love to live, there are some really important exceptions to this private party rule.
And here is the number one big-time exception you absolutely need to know. It's called, and it sounds fancy, but it's simple, stipulation pour-autrui. All this means is a clause in a contract that is intentionally made to benefit a third person. The classic example? Life insurance. The contract is between you and the insurance company, but the benefit goes to a third party, your beneficiary. That beneficiary can legally demand payment even though they never signed the contract. This is a board exam favorite, so remember it.
Okay, we've gone through the story of a contract, and we've covered the physics, the unbreakable rules. Now for the payoff. This is the brain hack. This is how you condense all this stuff into a simple framework you can recall 3 years from now, no problem.
All right, get your phone ready because you are going to want to screenshot this. This is your entire review session on one slide. Let's do a rapid-fire recap. A contract starts with a meeting of minds. It has 3 stages: negotiation, perfection, consummation. It's governed by 4 key principles: autonomy, which is freedom with limits; obligatory force, meaning the contract is law; mutuality, the two-way street; and relativity, the private affair. And the key exception you have to know? Stipulation pour-autrui. That's it. That is your long-term retention plan. So I'll leave you with this final thought. Now that you know the rules of the game, just think about your day. That coffee you bought this morning, that streaming subscription you pay for, that online purchase you just made. Which of those simple agreements was actually a full-blown, perfected, legally binding contract? Once you start seeing it everywhere, I promise, you'll never forget it.